think of the people that lost their life savings just recently with trading on GameStop.
Distort the money so that we can feel good about seeing our price go up because it's greed. It's illogical.
I appreciate your optimism that maybe through Bitcoin, it's something that is more math driven, energy driven, takes a human element out of it.
For me, in my mind, I'm already thinking in terms of quadrillions because this is like our best case scenario, more or less.
To help me preserve my capital so I have something to leave for my offspring someday. Because I'm Jim Carragher, and I'm kind of a novice on the Bitcoin, and I've been reading like a lot of people about it, and probably Luke, like when you first discovered it too, and just kind of looked at it from the sidelines, not quite sure. And I've enjoyed your previous podcasts and have learned so much. And the biggest thing is that I trust you, and I'm so impressed with your historical knowledge and some of the things that you have stated and posted. I have shared with others just because they're great topics about where we're more connected to the past than sometimes to the future, and it just really some outstanding things. And what I like about it, Luke, is that you back it up with the actual numbers and the events that happened in the world that help shape all these things. So I feel like I'm in very good hands with someone that I trust that will get me a much more knowledge base on Bitcoin. I'm going to call it Bitcoin 101 here, that I'm going to learn from an expert. So I just thank you ahead of time.
Well, thank you. Thanks for the compliments, Jim. Yeah, I appreciate it. I guess what I would say is that, I'm glad I could be a trustworthy voice, but, both for you and everyone else, I encourage you to verify. And that's partly why I like to show so many touch points, so many starting points where people can learn more, or data points to look at, so that, basically I have a worldview. I have a worldview with very high conviction that is very different than most people's. And I know that it oftentimes is offensive to most people in the same way that it once was an offensive idea to me. And so I hope that in being a trustworthy character, I can encourage people to verify that information on their own and come to their own conclusions. So I guess without further ado, let's get to it. So what did you see of mine first? And just getting to our first question here, what kinds of thoughts, what were your first reactions? Because most people I speak to, they're frankly, their brains kind of shut off. It seems too absurd, or too preposterous, or too confusing, abstract, whatever. When I first was speaking of it, and you were listening to shows and previous podcasts and threads and articles I've done, what were your initial questions? What do you feel, just so I better understand, what do you feel are the big unknowns with the idea?
Well, and I think Luke, your timing was just perfect for you that people become aware of your knowledge, because of the whole thing with that the FTX situation and how that exploded. And I'm trying to, when was that first? Was it December, January, when that whole thing? It was after the election.
Yes.
When that whole thing, the whole thing evaporated. And I'm
Correct.
thinking, how many investors got sucked into this?
Yeah.
And that was quite startling. And and they say, well, where did the money go? Did it ever exist? All of this. And so it was really enlightening. And I've got to believe I'm like many people that kind of thought about this. Should I try to make an investment? Some people said, well, you should have so much of your portfolio should be into Bitcoin. And then when all of this happens, it's a shock. And but I think you've been reassuring in your comments, and that said there's going to be these shocks, etc. So it was just kind of, your timing was just spot on. And it really, then when something of this magnitude happens, I'm a curious person. I think like you are, I try to dig into something to see, well, what are the what's behind this?
Yeah, yeah, that's a great point. And to be totally frank, I'm a little very irritated that I didn't become famous online earlier before the FTX collapse because I had not a single dollar in the FTX collapse, and
Hmm.
that's not to uh, put myself on a high horse here and say that, oh look, I'm smarter than other people. That's just to say that most people, when the FTX implosion occurred, most people, in my life and online, or whatever, looked farther away from Bitcoin because they thought, oh, it's dead. That means it's going to zero. They looked away,
Right.
but the people that were paying attention uh, were looking at the folks like myself that were hardcore into Bitcoin, pounding the table and promoting it and
Hmm.
talking about it and everything. And yet the Bitcoin folks were the ones that were predicting the collapse of FTX, and then they did collapse. And so I think for people such as yourself that I would commend, I think that curiosity is the first component to understanding Bitcoin. Most people, Jim,
Hmm.
just aren't curious. They see FTX and they label it onto everything else. It's the same idea in the 2000 .com bubble. Most people look at
Hmm.
all the internet scam companies, just unbelievable garbage. It's so bad. In fact, we could talk about this later if you want, but the stock market has not recovered against the monetary supply since the dot-com
Right.
burst.
Right.
It was so inflated and so preposterous. And yet, if you were to be in 2002 and say the whole internet has now died, it's not it's not the same thing. And so anyway, all I'd
Hmm.
say is that I think that's partially why people really gravitated towards me early on, is because even though I wasn't nearly as vocal before the FTX collapse as I could have been and should have been probably, I think that breath of fresh air of continuing to differentiate between fractional reserve and full reserve systems, I think, the people that are remaining are much more curious as you are today. So anyway,
Hmm.
that's interesting that event that kind of turned a lot of people away is what had you become more interested. And ironically, that goes into your first question, because your first question here was about Satoshi Nakamoto and the creation of Bitcoin, when it was, and all that. And it was during the great financial crisis of 2008. You're in real estate. You remember what that was like. For the younger folks like me, do you want to give like a brief 30-second background of what that felt like when?
Well, it was very startling because the home values, rental properties, everything had been running up out of line with what I would call reality, from what even we talk about cash flow and you gross multipliers on rent and what something should be. It should be like 9 or 10 times gross rent. And then all of a sudden, these things were jumping up to 16 to 20 times, and you knew it was not sustainable. And then people were actually buying properties with interest only loans, even no doc loans, and then all on the hope that the property is going to increase so much in value, and this is how they would make it. And it was such a bubble that you could. I had a gut feeling that it was going to burst. And fortunately, I didn't buy any properties during that time because I just had that feeling. I've been around too long. I try to go to historical averaging on what what a property should be worth, and I think they haven't reinvented the wheel. It was out of line with reality. And as you know, Luke, we've talked about how the bundling of the no doc loans and this, and it was sold off on Wall Street, and on and on. And I just these things can't. Eventually, they come back to earth. They
Yeah.
can't sustain that. And there's been, and as you know, you're a historian. Think of the. It makes me that made me think of the tulips, a great tulip fiasco way back, and all these, and it's mankind for somehow is suckered into these, and they try to get on, before the bubble bursts. And I can only think of that. Think of the people that lost their life savings just recently with trading on GameStop. This
Yeah.
kind of same thing, and I think it's just in our DNA that it's greed, isn't it?
Yeah.
I think it is. It's a human condition,
Yeah.
but that it can't be sustained. And that's what I wondered, if that didn't come out of the 2008 collapse, that this was one of my questions. Was this partially why it was invented, because of that situation, because of the monetary policy then.
Yeah, that's a great summary. And the one thing I want to come back to is greed. Is greed, and that humans are logical and humans are emotional. And so
Yes.
what we like to do, because we have those three components, is that we like to see the price of our possessions go up. We like to feel like everything's becoming more valuable. We like it when our house is going up in price. We like that emotionally. Now, and you mentioned it before regarding technology, one of the things I continue to hammer home to people is that this is not how reality works. Houses are becoming cheaper. If we were to go back in time to the ancient Egyptians or the Romans or the Chinese or whomever, the average mansion then is not nearly as prosperous, not nearly as fancy, not nearly as nice as, say, a house from the Victorian period. And why is that? It's not a matter of square footage. It's a matter that the house from the future was a better house than the mansions previous. And likewise today, I'm sitting in this beautiful home here and homes all around me. Every single house in the street here is much nicer than a Victorian era mansion of royalty. And the reason for that is, again, because of technology. The cost it takes for an average person to acquire a luxurious home is going down. But that doesn't play into our greed. We don't like that. We don't want to see
Hmm.
the price of a house go down, even though that's a good thing because it's making prosperity cheaper for us. We would rather distort the money so that we can feel good about seeing our price go up because it's greed. It's illogical. And so, regarding the 2008 GFC, Great Financial Crisis, the long story short, and I'm sure you know a lot about this, Jim, but especially for the people listening, the long story short of what happened was that the Federal Reserve in the early 2000s, especially after the 2000 dot-com bust, they basically injected all kinds of liquidity
Hmm.
into the economy with extremely low interest rates. And what they did is they basically gave a fire hose of liquidity and a fire hose of money over to Wall Street. And what most people do is they tend to blame Wall Street for the great financial crisis with all these CDOs and all these horrible
Hmm.
double tranche, triple A, triple D, whatever financial products that were extremely risky, like you said. But the reality is human greed. If because we wanted to corrupt the ledger, the underlying money stock of the nation and of the world, arguably, what we've done is we've basically provided uh, risk-free liquidity to Wall Street, and Wall Street is incentivized to gamble that money because if they don't, well, the guy down the street's going to do that. Wall Street is incentivized to become corrupt. Wall Street is incentivized to take absurd risks. To put it another way, if the Federal Reserve is going to give you money at interest rates artificially below market, and you know that, well, if you go bust, they'll just socialize the losses. What other incentive do you have besides to gamble it more and more and more when you run out of financial products? The Wall
Right.
Street, yeah.
And Luke, our politicians were involved in this too because they're trying to increase home ownership, which is a very novel thing that we want people to take have ownership. But that incentivize, they change the rules for Fannie Mae, et cetera,
Hmm.
to allow these things.
Hmm.
And they're normal. The first investment property that I purchased, I had to have 30% down, and I had to produce 3 years of my personal income tax returns. Plus, I even had to show where the money came from for me to make the down payment.
Hmm.
Had to show
Hmm.
verification, and that's how stringent it was. And the first property that I purchased, I was very fortunate to get a mortgage on a note at 16.5%, and that
Wow.
was and that was the only place even in our area that was even loaning money on investment property. And
Hmm.
then I remember refinancing that down to 12%, and I thought I had won the lottery.
Mm.
But that's the difference now. And that the story goes that back then, if you could make hold a mirror up and make a breath, you got a loan.
Yeah, ninja loans, no income, no
Yeah,
job. Yeah,
yeah,
yeah, yeah.
exactly. That's how much, but
Approved.
that was fostered by Congress too.
Hmm.
It was all they were
Yeah,
all.
yeah, exactly. One of the things I hear often from people that are trying to wrap their head around Bitcoin, trying to wrap their head around what the problem is, often what happens is that people want to replace the people in power with new people in power. Typically with
Mm-hmm,
folks that are lower in agreeableness and higher in empathy, let's say, typically lean more
mm-hmm,
towards a left political spectrum, and so they tend to trend towards minorities and ethnicities that haven't been in power before and everything. And so, the more left-leaning folks want to cycle out the current people in power, politicians, old white men, quote unquote, with people of different ages, sexes, or ethnicities. And likewise, the people more higher in agreeableness, lower in agreeableness, and a different set of personality traits. Those folks tend to be much more conservative, and they want to keep the similar politicians. They want less regulation, everything. And so what we have are these two spectrums, basically, of political disagreement. And then I interject in, the Bitcoin argument interjects in and says that if you have a monetary system where humans are in control, the problem is that, as you said with greed, humans inherently are greedy. And it doesn't matter if we're in a communist nation or a democracy or a public, constitutional republic. Doesn't matter what the political party in power is or the color of their skin. The reality is that human greed will desire for prices of our stuff, houses and stocks and bonds. We want the prices to go up. No matter who we put in power, eventually, whether it's a small board of individuals or it's centralized out to the entire nation,
mm-hmm,
we always will vote people in power to corrupt the money because we have that greed. We want that to happen. And so going back to 2008, well, what happened? What should have happened would have been a complete banking crisis. This is a
mm-hmm,
rabbit hole I won't go down into, but we were very close to a complete
mm-hmm,
banking crisis. JP Morgan, every other bank would have been another Lehman Brothers. The Lehman Brothers collapse
mm-hmm,
would have just continued bank after bank after bank after bank in 2008, 2009, if Ben Bernanke had not stepped in with the Troubled Asset Relief Program and inject a whole bunch of liquidity into the
mm-hmm,
system, because all this debt had been built up over the previous years and decades, and all that had to unwind. Because, like you said, when there is this discrepancy between reality and prices, that
mm-hmm.
eventually has to come back down to earth, just like a tulip bubble or any other mania.
Right,
Even
right.
if it's something safe, like low risk, fixed income, mortgages,
Mm-hmm,
whatever. And so what happened was that Ben Bernanke came in and he injected a whole bunch of liquidity through the Trouble Asset Relief Program and eventually quantitative easing here. And if I don't know if you can see my screen or not.
mm-hmm. I sure can.
Yeah, but you're probably aware of this. Tell me if you're not. But for the average person here, what we're looking at are liquidity programs since 2008. So if we go all the way back here to the very beginning after the Great Financial Crisis, we can see this volatility here of increasing quantitative easing. Now, this is a very complicated topic. I won't dive into it deeply, but basically what we're looking at here are balance sheets, and you can think of it as printing money. It's not
Mm-hmm. No,
technically
that's
printing money, but
exactly.
yeah, but it effectively is, even if it's not
Luke,
literally.
you're
Yeah,
summing it up perfectly, and
yeah,
that's
okay,
exactly that. And it interject funds, and
sure.
then it can take us right to common day right now. Um, uh, from all the stimulus, the money that was spent, of course, during the
Yes,
pandemic, and then they still question why that we have inflation that's still this last month at 6.4%. There's
yeah,
just there's so many dollars chasing the same amount of goods, and
exactly.
it's just it's econ 101. And I that's the biggest thing we can do is try to educate people on this. And I'm having that conversation with my two kids about this all the time. So they've been fortunate to grow up in that household, but I got a feeling that I'm probably
You're very
not the
rare,
norm.
Jim. Yes.
Yeah, you know what I
Unfortunately, yeah,
mean. But you're spot on it, Luke.
yeah,
And
yeah. But
yeah,
what we're
no, it's
What we're looking at here, we see clearly the pre and post 2008, the first era of quantitative easing, all this liquidities injected through TARP and through QE one, and then continually over the last decade. And surprise,
Mm,
surprise, we've had the longest bull market in American stocks in history over the last decade. We can see that the QE just continues. Now,
mhm,
towards the mid last decade, 2015, 16, 17, 18, the Federal Reserve made a promise, we're going to reduce our QE. It's gone up too much the last few years. But the problem is that when you begin to reduce liquidity, all these banknotes and all these funds, eventually they go down at an exponential rate. And so eventually, late 2018, 2019 or so, we had to interject. Now, um, thankfully, from a liquidity perspective, we had a major crisis that could justify um, flooding the system with money, to put it in the Federal Reserve's terms. And so we have this massive spike here in 2020 with the
mhm,
lockdown, pandemic, and everything.
mhm,
It continues, the rate continues to go up even after the lockdowns are lifted. And now what we've had last year is liquidity is being sucked out of the system. And that's why there seems to be this larger and larger threat of recession. That seems to be why there are all these threats of everything. Because when you have less money in the system, you cause the relative value of debt to go up against assets and everything. And so we have this more or less like constraining of everything that's happened. And so
mhm,
to tie it all back to Bitcoin, Bitcoin was released in January 2009. So right all the way back here in very early of this most modern QE program. And the basic story here was that no, it was not 2008 crisis that caused it, Jim, but that just happened to be the time at which Satoshi Nakamoto, which I'm not sure if you're aware that is, but that's the person or persons that
right.
created the algorithm that today we call Bitcoin, or the system protocol that we call Bitcoin. And most people don't know this, Jim, but Bitcoin had been in development for about 40 years. Nikola Tesla, 1900 engineer, by the way,
Mhm,
was
mhm,
the first person, at least I can find, that predicted Bitcoin, at least to some relative accuracy. And then Henry Ford was next in 1921. He actually tried to make it, but he couldn't for reasons I won't get into. But then, really, from the 70s, 80s, 90s, early internet days, there were these people out there called cypherpunks that were trying to create Bitcoin. Names like Adam Back, Hal Finney, Nick Szabo, and like half a dozen others or so. Really, we're talking about a few dozen to a few hundred, almost entirely men, middle-aged, highly educated cryptographers of this era that were trying to create a peer-to-peer digital cash system. Adam Back, who's alive today, Hal Finney unfortunately is not, but Adam Back is alive today. He was the person that created Hashcash, which was a predecessor to Bitcoin. Hashcash failed, but the difference between Bitcoin and all of its attempts before, its dozens of attempts before Bitcoin, the difference with Bitcoin was it was entirely free, and it was entirely volatile with the demand of the free market. So the problem with Hashcash or others similar to it basically was that it couldn't adjust with the free market, and it was trying to peg value to a currency unit within that system.
sure.
And so what Satoshi figured out brilliantly was that we can't do that. It has to stop. It has to be completely detached, and it has to be volatile with the demands of the free market. The best metaphor I could give would be, if we said that every bar of gold has a fixed peg amount of value of everything else, it would not work, because as soon as someone somewhere trades it below that, it's like a bank run. It's a Ponzi scheme. It collapses. It falls apart. You have to have it be a commodity out there just floating around that's price is volatile along with demand. It has to be volatile both upwards and downwards. And this, for example, is one of the reasons why Bitcoin can crash 80, 90, 95% and has before, and come back just fine in like a matter of a couple of years. You don't see that with any other asset or any other system for that reason. So all the predecessors to Bitcoin failed for a wide variety of reasons. That's just one of the reasons. And I know for the people that are technically minded, I'm like really glossing over nuance here, but for the sake of
No.
example,
So you'd say, look, the marketplace then actually decided that that would be the prominent the one that won out. Because
Yeah.
my question is that I've read that like China has thought about making a digital currency. India has, and they haven't been able to do this because it's the free market will decide which who's the winner is going to be, correct? and
Yeah.
and
Mhm.
and the gentleman from Japan, everything that I know of it just confirm is he's won out. Is that safe to say?
Yeah, yeah. I should say real quick that Satoshi Nakamoto is not Japanese. Probably that's a pseudonym. That's not his real name. We don't know
Oh,
who it
okay.
is actually.
That see, I didn't know that. That's
Yeah,
excellent.
yeah, yeah. We know a bit about who he is. I have my own guesses of who it probably is. But yeah, that's just a pseudonym from the person, and that's actually a feature that we don't really know who made it. I think there's a high chance that if it was known who made it, it would have been an additional attack vector. You know, again,
Sure.
the whole idea is that we need a system that humans aren't in control of, and so if we actually have a face to put with the system, you know, people like to idolize
Oh,
folks. People, yeah, and
that's such good information. Thank you, Luke.
yeah, yeah,
And
which
that leads me to how did he come up with 21 million, um, and then no more?
yeah,
How does he? What is the significance
of that number.
of that number, and how many more are going to need to be created to hit the 21 million?
Yeah, well, that's a great question. I'll look up its supply schedule here. I'll show that. I'll pull it up in just a moment here. But yeah, the number 21 million is completely irrelevant. It does not
Okay.
matter. It does not matter what the number of units are within the given system. It only matters that the system has a finite number of said units. So you've heard in my other podcasts the metaphor between oxygen and the Mona Lisa. Likewise,
Yeah.
it does
Yes.
not matter how many units you divide the Mona Lisa into. It only matters that the Mona Lisa has a frame to constrain it. You know, that constrains it.
Yeah.
It doesn't matter if there's 100 trillion bitcoins or a million bitcoins or 10 bitcoins. It just has to be a fixed amount. Now, the reason it's 21 million here, and I'll pull this up really quickly here. One moment. Boom. Okay. Can you see my screen?
Yeah. There we go. I've got
Okay. Yeah.
multiple cells
Multiple
here.
inches here. Yeah. Sorry, I'm just doing a
There we
Google
go.
image
No, that's
search.
fine.
Yeah. So what we have here on the right, we have what's called the block reward, Jim. And what
Okay.
what
Yep.
what Satoshi did. So every Bitcoin has 100 million units within a single Bitcoin. So in the same way that a sat is, or excuse me, in the same way that a cent is 1/100th of a dollar, a Satoshi, you know, again going off the pseudonymous name,
Hmm.
one Satoshi is 1/100 millionth of a Bitcoin. So what Satoshi, again, the creator of Bitcoin, did was he said, okay, we're going to have 50 eras, we're going to have 50 epochs of where the supply halves every 4 years. And we're going to start up from the end, working backwards. We're going to start out with one Satoshi. So 1/100 millionth of a Bitcoin, every
Hmm.
block reward. If you go down here, I don't know if you can see my cursor, but all the way down
Yeah.
in 2140, or excuse me, 2136, we have a one Satoshi, 0.00000001 Bitcoin per block reward. And so if we go backwards in time from 2136 all the way up to today,
Hmm.
you know, then that just goes up. And then he chose this number, he chose the algorithm because it perfectly or almost perfectly is 21 million. Technically, it's like just under it. But basically, the only significance behind the numbers themselves are that it's just what he designed. It's a very simple equation. You know, frankly, um, is very frustrating when people think that Bitcoin is more complicated, because the reality is that the monetary policy of the Federal Reserve is many, many pages long, and the whole monetary policy of Bitcoin is just one equation here. So,
Well, and then
but
maybe that I equate it a little bit to nature, the simplicity of nature, how it works. It reminds me a little bit of that.
yes,
Sometimes simpler is better.
yes, exactly, exactly. So what we have here is the table that I just outlined, except in an image. So our y-axis here are the total number of Bitcoins within the system,
Hmm.
and the blue lines are the block rewards for every 4 year period. So what we see, looking at the blue lines first, is that every 4 year it halves and halves and halves and halves. And the first, again, exponential nature of math, nature, physics, reality, is that the first halvings are the most consequential, and then it pretty much looks like a flat line, flatter and flatter and flatter. And this is again by design, because if you're going to create the system, anonymously launch it on the internet, and cross your fingers that it takes off naturally, organically, with demand at some point in the future, you have to have every halving become less significant on the block order than the previous one. So anyway, I'm probably going off the rails here, but the important thing for scarcity and supply is the red line here, and that the red line is the total cumulative number of Bitcoins in the system. So in the first 4 years, between 2009 and 2013, we had just over 10 million Bitcoin mined. And then the next 4 years, the next halving, half the amount. The next halving, half the amount. The next one, half the amount. And so it just goes down and down and down continuously.
Mhm.
And so the best way to put it, to help people understand, is that imagine if you have the Earth, you have the whole sphere of the globe,
Mhm.
and there's no gold outside the Earth. In reality, there is gold outside the Earth on other planets and asteroids and everything. But for the
Mhm.
sake of example, let's say all the gold in the universe was on the Earth, and that Earth was mathematically programmed and designed, in an equation that no human could control. That every 4 years, the difficulty of mining gold on Earth becomes twice as difficult, or actually a better way to
Mhm.
put it, a more accurate way to put it, and that would be that the remaining supply of gold shrinks in half. That's a more accurate way to put it. So when you view it that way, it becomes abundantly clear why Bitcoin has only continued to go up in value over the last decade or so. It's
So
because
when it approaches, Luke, when it approaches near the end, then when they're almost at that
yeah
21 million, won't there be an incredible one time a spike that people, this is their last chance to get in on it? And
yeah
it's a timing. It's just like anything else. It's timing to get in on that, knowing that there's not going to be any more created. And then, but that leads me into the next one. Who who certifies that that it's a true Bitcoin? That when someone creates this through their servers, etc., is there a universal an organization on Earth that is the be all and end all that says this is an authentic Bitcoin? These are just questions I have, thinking, yeah, you know what I mean? Because we can
yeah
tell. Hopefully, you can tell if there's certain threads put into $100 bill now that you can tell if it's real or
yeah to
not,
verify. Yeah,
to
yeah.
verify, because counterfeiters from way back have always tried to beat that system. And so, who certifies this too? That's a big question.
Yeah, so your question is, if this exponentially decreasing supply is true, doesn't that mean that there's going to be a massive supply run in the future? Number one, and number two, who actually verifies that supply in the first place? So I understand that basically,
Mhm.
right?
Yes,
Yeah.
yes,
Okay.
absolutely.
Yeah. The basic question of will this occur at 4140? I believe yes, your understanding is correct, that there eventually is going to be a supply squeeze. And I would say it's probably not going to be all the way up to 2140. The reason for that is because the supply is being squeezed every 4 years or so. If what we'll look at it more in a moment, but we'll see that Bitcoin's price action, at least thus far in history, has been extremely correlated with its halving schedule. So every 4 years, when the uh, remaining supply of issuance goes down by 50%, what happens is that you have the same amount of demand chasing half the supply, so then price naturally has to go up, and then eventually get the bubble, the scams, Ponzi's, and all that. It's a cycle that continues on. My best guess for the future is that the impact of that will go down. However, adoption will only go up. So we're basically coming out of a hyperbolic phase of Bitcoin where it's becoming less volatile, although still to the upside. And I suspect that that will return in a hyperbolic fashion once adoption arrives in the late 2020s and early 2030s, or so. That's my best estimation, and that's based on adoption curves of previous technology. It's kind of how things go, that things that previous technologies go from no value, they skyrocket up, and then they kind of flat line as there's a little bit of users, base users, and all that, and then they skyrocket again in price in a hyperbolic fashion
We used to
later
call that
on.
in business school the early adapters, the laggards, etc. And I kind of equate that to you speak of the halving of it, and I think it's a natural occurring how it was designed. It's very similar to, was it last week when Mark Zuckerberg with Meta announced the big stock buyback to
Yeah,
take less out of circulation, and
yeah,
it's natural. Um, and this is what caused so much consternation with a lot of people, that with this cheap money, these companies have been able to buy their stock back, enriching, of course,
yeah,
the stock owners. It's
yeah,
just, but that's a natural. You spoke of that, Luke. It's a natural human thing that will happen.
yeah.
So I think it, but this is a, it's almost, he set it up that way to do this.
Hmm.
It really fantastical stuff when you think about it, the
Yeah,
genius of it. But
yeah,
like you said before in your other podcast, it's mathematically based.
yeah,
And
yeah. If we go back to the stock buyback, that's a very good metaphor for those in the more traditional finance space. Is that what's really happening on a stock buyback? Well, the company believes that it's worthy of saving their money in their own equity for the future because they believe that the underlying money,
mm-hmm,
the real money, the U.S. dollar, is an inferior form of money to their stock because the issuance of their stock is is more difficult to inflate and supply than the US dollar. And also they're in control of how much stock they issue too. So they also get to be in control of that. And so, if you want to think of the world today, the fiat currencies of the world we have are basically like 140, 145 different political jurisdictions of different fiat currencies. And we barter between them when we go across borders. And likewise, every company to a certain extent has its own form of currency in the form of its stock. And so when Bitcoin comes along, well, what's the difference? Well, the difference with Bitcoin is number one, its supply is much more immutable than every other supply of everything else in humanity. And the reason for that is because there's an endless number of companies, there's an endless number of stock they can issue as the value of that company
mm-hmm,
goes up. They can always issue more stock. And it's the reality of economics. Again, Econ 101, that
mm-hmm,
as the price of a given product or a given commodity go up, the incentive to dump more of that supply in the market goes up. Again, if we're going back to the gold metaphor, if gold became twice as difficult, if the price of gold went up dramatically, what people would do is that the price of gold wouldn't keep going up forever. What would happen is there would be a higher incentive for more miners. Or take Zuckerberg with
right.
his stock. What is he doing? Well, he's buying back stock so that in the future the price of their stock goes up so they can issue more stock more or less out of thin air and issue it off to holders. Now, up to this point in history, that's worked, and it's worked very well for stock owners. But the problem is, what if we have a system that does it better, that's outside human control, and that's perfectly predictable? I don't know what Facebook's going to do with their stock in the
Right.
next 5 years.
Right.
I don't know what their cash flows
Right.
are. I don't know what their business plan is. I don't know
Right.
if Zuck, I don't know what he's going to do. And so what Bitcoin is it's basically like a stock that has a pre-programmed stock buyback continually forever until there's no more stock issued. And it's even better than that because there's no cash flows, there's no yield, there's no board of directors. There's no human at all. Again, if we think of a monetary system as a system of energy, the weakest point in any system is the point at which the system fails. If you think of a airplane, if you have one part of the airplane be weak, structurally, what's going to happen is that's going to burst out and the plane's going to crash.
Mm-hmm.
It's going to go from a closed system, burst open into an open system, and collapse down to zero, down to earth. Or again, the FTX thing. Most people look at FTX, they think it's Bitcoin. It's completely different. FTX was an open system. The FTT token, if I can pull that up here, the FTT token. Give me 1 second as I stall and pull it up here. What we have here is an open system where FTX was open and functioning for years, and what we had for all this time, 2019, 2020, 2021, on and on, the network survived and their native tokens survived. Again, if we're thinking of stock as the native currency of a company or a political currency unit, a fiat currency as a country's currency, you could think of the FTT token, the FTX token. And because it's an open system, because Sam Bankman-Fried could just dump more and more on the market, create it out of thin air with no brute force physical cost, eventually, once the bear market began in 2021 or so, again, going back to the Federal Reserve, decreasing liquidity, that impacts everything. Their liquidity began to decrease. Why would you own FTT token when you could just own the US dollar? On and on and on. And then I remember this period right here where I was warning people to get out because it was just declining more and more. And then right around here, these few days here, it became everywhere online, everywhere on Twitter, Reddit, Discord, whatever
And
social media platform you were on, if you were in the crypto Bitcoin
Luke, and I,
space.
I love that.
Yeah.
This is such a normal thing. Going out just a little bit further, you see that sucker rally there. You see it
Yeah,
where
right
it
here.
spiked. Yeah, and that's such a
Yes.
normal. And then people lost again, and
Yeah.
then and then it made one more run back.
Yeah.
Look at that in 2023 there, and
Yeah.
that's probably
Although that's on log
July.
scale. That's
Yeah,
on log
but
scale,
it's
so it's a little different. Yeah.
yeah, but isn't that but it's just normal what happens, and it's just so fascinating how even in that it evens out, and so that
Yeah, so the point there being that the open system has to, decline slower, and then it's just off a cliff because, again,
right.
going back to the hash cash, the pre-Bitcoin metaphors,
Hmm.
they all fail because once you get below that peg, it's just
Hmm.
it's like a game of musical chairs that happens in real time. Who's the last out the door? And that's hyperinflation. There are hundreds of examples of hyperinflation throughout
Yes.
history. That's the same thing. What happens is that finally it's off the rails enough that people's expectations for the next 90% decline in the given currency become faster and faster and faster, and that curve inflects upwards here. And so, basically you could think of Bitcoin in that sense, in that if it's a closed system and if it's outside of human control and nobody's able to corrupt it to the point where that hole bursts out and it begins its decline, then theoretically the underlying value of that system and relative value to all the stock buybacks and all of this and all of that, the
Hmm.
relative value should only go up, at least theoretically. And that's why engineers, I believe, predict it much easier than finance people, Henry Ford and Tesla and everyone of that sort. So anyway, that leads into your second question that led into all this here of who verifies that, who's who
Yes.
who decides that this is true, or is this all just made up? And the beauty of it is that unlike a fiduciary system where you're basically relying on an abstract power hierarchy of, say, the
Hmm.
Fed or a bank or
Hmm.
whatever, you're basically dealing with a computer algorithm, and the only way to transact or operate within said algorithm is if you obey the laws of that system. You can think of it like a game of chess. That's a metaphor that others in the Bitcoin space have viewed, that you can play your own game of chess. You can have your own rules or whatever. But if you want to play in this game of chess, you have to play by these rules.
And
Because
if you want to
otherwise,
play in my sandbox, here's the rules,
yeah,
as I used to
exactly.
say.
Exactly. And so Bitcoin has all these nodes and miners and everything else out there that
Hmm.
exist, but
Hmm.
they inherently can't verify or validate or operate in or produce or transact within Bitcoin system unless the computer is in full agreement with Bitcoin's entire history, its entire ledger. And I know I'm paraphrasing again for the technical people here, but that's the basic idea.
Hmm.
There are other kinds of Bitcoin, quote unquote. Let me look up Bitcoin Cash and Bitcoin Satoshi Vision are a couple other examples, Jim, of what we're looking at here. So if we go to their prices, let me pull this up now. And this really hammers it home, the visual explanation of what we have here. So Bitcoin Cash is, Bitcoin's in the name, so a lot of people get confused, like, oh, is this also Bitcoin? It's like,
Hmm.
well, kind of. It's extremely similar. It's much more similar to Bitcoin than the majority of other cryptocurrencies out there. Just for a long story I won't get into, look up the block size wars. But basically what we have here is we have a token that is only continuing to go down in price. And now why is that? Well, you could think of it as a different set of rules. It's a different kind of chess. And you could argue that this game of chess is better or cuter or fancier, or we have sparkles or whatever. But the
Mhm.
reality is that, I would argue in the vast majority of people in the cryptocurrency Bitcoin space would argue that its rules are inferior to Bitcoin for a long story I won't get into. But what we see on a log scale is that it's doing nothing but decline. And if we price this instead of the US dollar, but in terms of Bitcoin, let's see, how do I do that here? Compare with Bitcoin. Yeah, we see something even more dramatic here. We see that as Bitcoin, this orange line is
Wow.
continuing to increase in relative value for over a decade now. We see that Bitcoin Cash with its inferior rules is only declining, and its decline in relation to Bitcoin is even worse than it is with the US dollar. Bitcoin Satoshi Vision is another example. I won't get into a long story here. Believe me, there's a long
Hmm.
story, but it's the same idea that it's a different set of rules. It's an inferior set of rules, and because of that, it's declining against Bitcoin on a market cap and a price space. Whoops. Yeah, this is why I don't like Bitcoin market cap, but or crypto market cap. But anyway, the basic idea there being who validates it. Well, who validates it are the nodes, and the block reward goes out to the miners. And the reason that there is what is called hash, basically think of computing power, energy, electrical
Hmm.
cost.
Hmm.
The reason that it congregates onto Bitcoin is because it's the longest surviving time chain, blockchain. They're basically the same thing for the average person, but it all congregates to one. In the same way that all monetary value flows out of the peso and out of the yuan and out of every other fiat currency into the dollar, because the dollar is the most trustworthy fiat currency out there. In the same way, it all congregates to Bitcoin, and that there's no competition or anything else, because why would you be a part of some other system when you could just be a part of Bitcoin? That's the black hole metaphor I've given to others. That all these other cryptocurrencies and digital assets and whatever, 99% of them are flawed open systems like the FTT token that eventually have to crash. And you can make an argument there's a couple out there that maybe are closed systems or whatever, but even if they are, they have a
Hmm.
decade, they're a decade behind of Bitcoin. There's like virtually no chance that they'll keep up. And all that monetary premium is already flowing to Bitcoin. It's only going to continue to. So to really um, hammer that home, let me look up total hash here. This would be good to look at. No, I don't have it right in front of me. Anyway, I don't have it in front of me, but I made the point that who validates it? Well, it's a series of computers that run on their own, and they can only reinforce the rules of the protocol. And if they don't, they inherently get booted out. And now you've created what's called a hard fork. You've created your own little world. You've created your own chess game.
So it's
So,
really it's a self perfecting system the way it was set up. That if they
yeah,
don't play within the mathematical formulas, it's not going to work. And that's one of the reason
basically,
I
yeah. Mhm.
well, and that's one of the reason I married a math teacher was because she understand and she always because I would say, well, I didn't do as well as I thought I could do in
Yeah.
calculus, etc. And she always would get upset with me. She says, it just makes sense. What can't you understand? It makes it so straightforward. And that's the way how she loves mathematics. And
Hmm.
just like an engineer, it's the same, it just makes sense
Yeah.
to her. And
Yeah.
and she loves how formal that is, that these formulas they come together.
Hmm.
And she
Hmm.
said it's its own beautiful language.
It
And
is its own beautiful
it's,
language.
yes,
Yes.
that's how I would say it. And I thought, well, it's one great thing. It's going to help my kids. They're going to inherit some of her math skills, and they did, fortunately. So
Good. Good. Well, maybe you'll understand this too. But yeah, I guess to expand on that a little bit, you didn't ask this question, but I think it's important to mention because I think a lot of people watching this will have this question of what are the implications of that? Well, every other system we've had, Jim, has been basically okay. We have a monetary system, we have a stock, we have whatever, and somebody has to set the rules. So here are the rules.
yes,
Now the whole incentive is to find who's controlling those rules. How do I become that person that's controlling the rules, or how do I buy out that person that's controlling the rules? And I really go into this in the Preston's podcast on the Investors podcast. When you watch that, Jim, and really one of the points I hammer home in that show with a lot of data to back it up. I highly encourage you to go watch it after this one, being about that if you have somebody controlling the rules of that system, what you're doing is you're incentivizing attention away from productivity and towards who's controlling the system, who's controlling the rules of this proverbial game of chess. And as the total aggregate value of that monetary system goes up, the incentive to be the person that's managing and change the rules go up, which can create this feedback loop. And just like every other engineering system, is eventually why it comes back to roost, because the incentive gets so great that there's no more productivity, and that it basically collapses more or less. But the difference is, okay, now if we have a system where there's no person in charge of the rules, we've never had that before. There's nobody in charge of the rules, and so there's no incentive to destroy it. The only way that one can control Bitcoin would be if you have the majority of hash, if you have the majority of energy, electrical energy, computational energy. That's the only way you can get a control of it. But Jim, here's a fascinating thing. Most people think, oh, what if, you mentioned China with their own digital currency earlier, what if they ban Bitcoin? What if this person bans Bitcoin? Blah, 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 blah. The implication here, if you have a system and nobody can be in charge of it, and the only way to theoretically get in charge of it is to control the majority of the share, well, if you want to attack Bitcoin, if you want to censor it, the only logical thing to do is to provide hash and to provide energy to that network, whether it's monetary or in terms of electricity. So the only way to destroy or censor Bitcoin is to make it more valuable. So you attack it, plug in miners, put in capital, whatever, try to get control of the network. What do? When there's a greater amount of energy going into it, the monetary benefit in the block reward, the value of underlying Bitcoins in the block reward go up. And so if, say you're China and I want to ban this thing, I plug in a whole bunch of energy, I make the network more valuable. What does that do? That causes everyone else on planet Earth to also want to plug in and take get their control, because now you just made the incentive to greater. And this is the whole economics of mining that's completely fascinating, and I can go on a long rant about that. But basically what you have is that if you want to censor or destroy Bitcoin, the nature of the network is that the harder you attack it, the more it resists you because of free market dynamics. And so the more you attack it, the more exponentially it becomes to attack it on a sustained period and immediate. And it's a winner takes all. So you can't just get partial control. You have to take total control. Again, unlike current systems where you can get partial control, you have to take total control. And then let's say you somehow did that and nobody's been able to do that. Even if you somehow did that, well, all that would happen would be that you create a hard fork. It's like, okay, you spend all this energy fighting an exponential curve upwards of more and more brute force physical costs, more and more energy, higher and higher up. And now you've taken control, and good job, you're control of Bitcoin. Well, no, you're not really. As soon as you change the rules, now you've created a hard fork. You've created these two diverging paths. And so what do you think the free market's going to do? They're all going to leave you. And so the only way to effectively attack Bitcoin is to exert an exponentially higher energy cost in form of electricity or capital, and hope that the free market remains completely oblivious for an extremely long period of time and doesn't fight you, which they will, because there's a monetary incentive for them to do so. And then even if you got control, you'd have control of the network for 10, 20 minutes or so, and then it would hard fork and you would lose all your money. And so this is why, the Taliban and China and Afghanistan, all these other places, all these bans on Bitcoin over the last decade or so, and nobody's been able to destroy it. And that's the implications here, unlike every other system. Again, because if you have a system that there's a group of people or, powers that be that control it, as soon as you get control of them, you control the system. But the difference is here that you can't do that. And so anyway, that makes it much more anti-fragile than every other system that we have. Is that as long as there are computers on Earth where there's going to be Bitcoin running, because the monetary incentive for somebody to do so is so great that it's basically indestructible. And this is why a lot of Bitcoiners say that it's one of, if not the most indestructible thing we have, because it's just information, it's just a line of code, and the monetary incentive for people to have that line of code survive is so high that it's virtually impossible to destroy. So,
Well, and
does that
I
make
love
sense?
the fact that you've taken it really takes the human element out of it. It takes the people. I always think of the Federal Reserve Board, and they're supposed to be removed from politics and all this. And historically, I found that if they want to keep their position, then they're going to do basically what the president wants. And they've always said, and you've been around long enough, Luke, too, through election cycles, and they said, well, the economy is going to go up because it's an election year. And it's just so easy to predict these things. But what I love the fact on Bitcoin, then it's taken a human element out of it. And it's more of a pure system. And it's truly a free market system. And
Yes.
that's what it really intrigues me,
Yeah.
that
Yeah.
there could be such a pure system that has been developed.
Yeah, exactly. And
That's
that's why it's
outstanding.
volatile. That's why it's
Right.
volatile, because they're all free market participants, and that's people have been so disillusioned by the fiat and political currency unit um, system again, because going back again to the idea of greed, we want to see prices continue to go up in all of our products and services and houses, and we want to see it go up stably because we like stable things, even if it's not in line with reality, because technology
Right.
is exponential and
But
volatile.
I
You know,
but the
that's
old saying is that water will always seek its own level too. It's just a nature. Do you know what I mean? As much
yes,
as it was the
yeah,
bubble, the dot-com bubble in the 2008, et cetera, et cetera. It will level out. And that's I think of the impact that OPEC had on us years ago. I grew up, the gas crisis in 1974, and eventually then there was more product put on,
hmm
more production,
hmm
and that their share of the market smaller and smaller, and
yeah,
it seeks its own level. It has to. It's I call it physics. Uh,
yeah. And you're right, and again, that's why engineers and people in the realm of physics and are much better than, I would say, economists or financial people that understand Bitcoin. And frankly, I think, yeah, I love finance and I've been in it for a while, and that's ultimately what led me to Bitcoin, literally. But I think
mhm,
it was my underlying fascination of black holes and physics when I was younger that
mhm.
really helped me understand it, because I understood it's like, oh, okay, with a black hole, you put energy into it and you only make it stronger. With a planet, if you put energy into it, you make the planet or the star more unstable. You get supernovas, whatnot. In the same way with Bitcoin, again, if you want to attack it, the only way to attack it is to throw more energy at it. And that energy, because Bitcoin is digital energy, only makes it more valuable and more difficult to
Yes.
destroy. And so, anyway, I like your point about water, going back to where it goes. So one of your one of your points too was about how humans being in control. And I just wanted to show this real quick. You probably remember this clearly, but we have Ben Bernanke here again, the guy that basically pushed the big red print button after 2008, and we like to
Yes.
idolize him. We like to see our prices go up, so we corrupt the measure of value of the world to see those prices go up, and then when inevitably it has to collapse, we voluntarily put somebody in charge that continues the delusion on for longer, and then we idolize them. And so this isn't to make fun of Bernanke in particular, but it's just to say the reality that human emotion likes to be greedy, and human emotion likes to idolize people, and human emotion likes to ignore um, math. We like to ignore it for the sake of emotion. And that's one of the ironic things, that people think that Bitcoiners are emotional and we just want to see number go up. But it's like, no, not necessarily. There are a lot of those people, but the hardcore Bitcoiners like myself, it's like, no, we're in this thing because of math, and we believe because of the math, it has to go up. And
And you're
so,
looking, Luke, what I appreciate about you is that you're looking at the long term play.
yeah,
You're looking out really decades, and
yeah,
you can kind of see the handwriting on the wall, because we talked about this earlier. We cannot continue at our current trajectory of printing money. And I loved your analogy of a boat out in the ocean with a hole in it.
Yeah.
because it's so true. And of course our politicians just can't seem to get that. They don't want to get it, because if they were to speak the hard truth,
Hmm.
they feel they wouldn't be reelected.
And the people are willing to go along with it because again,
Of
we like to
course.
idolize humans. We don't want to think about Bitcoin money, this and that, the other, because that's math. That's hard to think about. We'd rather
Right,
just say, okay, my political party with a given color and this person,
right,
this face, this
right.
is going to fix everything, you know. And yeah, I don't want to get political here, but let's be frank about it. People thought, you know, Bush would fix everything after 9/11, and you know, we had the war and everything like that. And then people thought Obama would fix everything. And then people didn't like he was part of the establishment. And then they said, well, Trump will fix everything because he's outside the system, quote unquote. And, you know, they're right to a certain extent, I guess, and that he didn't have political experience, but they're wrong that he's not outside the monetary system. And so they thought he'll fix everything. And then people didn't like how he acted. So they're like, oh, well, now we need Joe Biden to get us, you know, and it's like, it doesn't matter who we elect next to a certain extent from a monetary perspective. You know, the
No,
reality,
because both, Luke,
yeah,
both
they're all
parties
idols.
are, but they're all at fault on that spending money,
Yeah.
and they just can't. Uh, I grew up when it was Graham, Rudman, Hollings, and things were going to have to be paid for. They went right around that immediately. They're right back to earmarks now and all of this stuff. We laugh about the bridge to nowhere in Alaska. Well,
Hmm.
that's just a minor thing,
Yeah.
and how government. Unfortunately, the older I get, the more I realize that's how government is,
Yeah.
and I don't
Yeah.
think it's going to take something, a real shock, to get that to change.
Yeah.
I'm afraid the consequences. I worry more about my kids and people your age, and someday when you have kids, what's going to be happening unless we have something come along like Bitcoin that's going to help stabilize this and
Yeah.
take the human element out of it.
Yeah.
So
Exactly.
that would be my hope,
Yeah.
because I have seen this exponentially. They used to talk that it was 10 trillion in debt, and now we're over 32 trillion, and it's just it's stupefying to me.
Yeah,
And
and to add on to that, I agree with everything you just said. One thing I would say is that the math and the human element compound on top of each other. So the
mhm,
more corrupt the human element is, the more we corrupt the math, and the more the math becomes corrupted, the the higher the incentive to act in a corrupted fashion. So, you
mhm.
know, I mean, yes, the presidents or the Fed chairs or, you know, whoever, yeah, sure, they're corrupt, whatever. You know, but the reality is that the math also uh, incentivizes to do so. You know, this is a quick example. This is the interest expense of the US
Oh, yep.
government. And so it's, you know, I talk to people all the time that think rates are going back to where they were in the 80s, and I just, frankly, I'm dumbfounded. You know, like rates are at, you know, 4 or 5%, whatever, at the time of release of this recording. But it's like, you know, at these low interest rates, our government interest on our debt is just ballooning, is just skyrocketing. And we know that the debt has to expand in coming years. You know, like you said, we're at 30, 32, whatever trillion now. But Jim, to add on to that, you know, this interest expense of what we see is just at current interest rates. And interest rates, again, if we were in a free market, interest rates should go up to catch up with inflation. But we can't have that because it's all the math is already this absurd. And it's even worse than that because really, you know, yeah, sure, national debt's a big problem, but the even bigger problem are national unfunded liabilities, and people don't even realize that because, you
Oh,
know,
if you put in our Medicare and our Social Security, those are just
yes,
IOs that are in the system. And the trouble is, my problem is, Luke, there's not enough people your age. I'm going to have to, when I someday start drawing Social Security, I'm going to have my own worker. You can just support me. It's going to
yeah,
be one, and it's going to go negative. Whereas when it was first set up, there used to be 11 workers for every one retiree, and
yeah,
we're living longer and all of this. So it's something's got to eventually, like we talk about water seeking its level, something's going to give.
yeah, yeah,
And
exactly.
I feel so bad for the younger generation. um you got to be maintain positivity in this, but you're looking at it realistically, and but I think you're in the minority, Luke. You
Thank
have a
you.
world view, and you understand
Mhm.
history, and I think I appreciate your optimism that maybe through Bitcoin, it's something that is more math driven, energy driven, takes a human element out of it.
Yeah.
That's gonna that's gonna help us. Because I was so intrigued, and I told my friends about it. The one slide that you put up in one of your podcasts talking about income disparity,
Oh,
where
yeah.
you that was so well put and so well stated of when you have the money folks in the stock market, it's just increasing exponentially, and everybody else. And what year did that, when it finally took off, was that right after in the 70s,
Yeah,
when
yeah.
that corresponds exactly with 1971 with the gold deal.
Mhm.
And but that was a very startling thing to see, that because when you
Yeah.
have that kind of inequality, then you don't have a society that functions very
Yeah, it is ability to function goes down over
well. Right.
time, you know.
Yes.
And again, it goes back to the political thing. When there's income inequality, all the wealthy people say, "Oh, taxes are too high." All the conservatives say taxes are, too high and corrupt or whatever. And they're right. But at the same time, all the other people say that this income inequality is bad and, capitalists and this, that, and the other, and they're right. And the problem is that we like to blame other people and we don't like to look at
Right.
the reality. Again, to go back to the great financial crisis, this is going to offend a lot of people, but we all were responsible for the 2008 crisis. Yes, Wall Street was responsible, but so were the insurance companies that, also, AIG and all them that
All
collapsed.
in
So it
on
wasn't just the
all.
banks.
Yep.
The loan officers were also responsible. The rating agencies were
Yep.
also responsible. The Federal Reserve was responsible. And frankly,
Yep.
every homeowner that took out too much leverage on their house and they didn't have the income, they didn't do the due diligence on that, I mean, they're responsible too.
Yep.
The reason it was such a problem is that the whole society, we all were responsible to varying degrees, and nobody wanted to look at the writing on the wall, and that none of this makes any
Yep.
sense. And
I call it putting your head in the sand.
yeah, yeah,
It is. It truly is. I
yeah,
mean, it's
yeah.
just really something.
Yeah. Okay, so what we're looking at here, Jim, is the total supply of the US dollar between 1960 and 1975. We can go back a little further. This is a graphic I made a while ago. Okay, so there have been examples of hyperinflation in the past in the United States, granted not for a very long time, but we did have two central banks before the Federal Reserve's creation in 1913. Wrong century there. But yeah, 1913 was signed into law, and the dollar, the depression and everything after 1913, between 1913 and 1960, it lost a lot of its value. So if we look at the supply, again, if we think of this as a metric of the openness of the monetary system, we can see it goes up dramatically. Now, the dollar bubble that caused Richard Nixon to detach the US dollar from gold, that's what's roughly there in the 60s, we can see. 1971 is when the gold standard ends. That's when it was quote unquote cut off temporarily from the quote unquote speculators. And again, when Richard Nixon in his speech, I encourage you, anyone watching, to go watch it. When he refers to the speculators, what's he referring to? He's referring to the people that are trying to have the water flow in the direction it's supposed to go. And so, anyway, because they didn't want to have the speculators price the dollar based on reality, they instead detached the dollar from reality. So after there, the depeg of gold and the dollar, we see the inflationary decades of the 70s. You were alive then, along with a lot of
Hmm.
other people today to remember that. That's what we're looking at there. And now if we go out a decade or two here, then we go to the 80s and the 90s. So again, we have where the gold standard ends. And then 1981 under Reagan, we have 1 trillion in national debt. And that was a
Hmm.
big deal then. It made headlines. You probably remember that.
Yep. Sure
Today
do.
it's 30 times larger, of course, or over 30 times larger. But that's where we crossed 1 trillion in national debt for the first time in 1981, 10 years after 1971. And so, of course, going out further, we see an increase in the rate there towards the end. And as we approach great financial crisis here, what we're looking at, here we go. This is in 2022. So again, this is a little outdated, but it's the same idea. Here we're looking at, we can see the great financial crisis here, along with recessions. So we see all the recessions of the previous decades, the great financial crisis, of course, and the lockdowns of 2020, if you can see towards the right. So the 70s of inflation has already been dwarfed, and the trillion national debt in 81 has been dwarfed. The war on terror, Bush onwards, we can see that in the early 2000s and that excess spending. And then you see right there in that red circle, that brief leveling off. That's the 2008 bank bailouts. That's when all this debt was collapsing. And when debt collapses, the total supply of money also collapses. So that's that little indentation there. And then after that, we have just seen the 2020 stimulus and bailouts. That's largely responsible for all the inflation we have. And so, Jim, like you were saying, with the 30 trillion in debt, and like I was saying that how it's actually 170 trillion in unfunded liabilities. If we go out,
Yes.
we project Social Security, Medicare, and the ballooning expenses we have out, say roughly 20 years to 2045, we have a really big problem, clearly. According to the Medicare Board of Trustees, roughly 2026, 2027 or so, Medicare will begin to be insolvent. And granted, again, when we talk about this, we're obviously, even if the programs may exist beyond that day, I'm not saying Medicare ends in that day. I'm just saying that's when the Board of Trustees say it's going to become partially insolvent and more insolvent as a function of time. And so when there's that insolvency, and we don't want Medicare to go away because we care about our hardworking Americans, vote for me. What are we going to do when there is that insolvency? We just print new money. And so when we have that reality in 2026 and cross 50 trillion in debt towards the end of the decade here, and then you mentioned Social Security. Again, what is Social Security? You have a system that requires an exponential new number of members by paying in to pay
Right.
out the people that were in earlier. And that's pretty much exactly the definition of a Ponzi scheme. A lot of people find that offensive, but that's the truth. If Social Security only works if we have an exponentially larger group of people paying in. And people will say, oh, that's true with Bitcoin and everything else. It's like, yeah, sure. Same is true with real estate. Same is true with gold. Same is true with every commodity. That prices only go up if more people pay in. But the difference with Social Security is that it pays yield. Bitcoin does not pay yield. Bonds pay yield. And that's the difference there. I made my point there, but a lot more could be said there. So, for me, in my mind, I'm already thinking in terms of quadrillions because this is like our best case scenario, more or less, that we'll be thinking of quadrillions in 20 years or so. And so, in my mind, assuming we have another lockdown, recession, war, whatever, or entitlement program, it doesn't have to be violent per se, but whatever the case, I expect over the next 20 years, we'll only have more spending programs. And so really, if we're going to be thinking like, okay, in terms of quadrillions for unfunded liabilities in a couple of decades, to me, I think it's already almost time to start thinking about it now. Because, again, if we just go back in time to the 2008 crisis, the Trouble Asset Relief Program, I believe, was what, 800 billion? You might know, Jim, right? There's either 600, 800 billion. That's not a lot of money today.
No, not
Yeah,
trillions, just not what it used to be, as they
yeah,
say.
yeah, yeah, yeah. The whole housing bubble, the whole liquidity save after the Great Financial Crisis was, between half a trillion to $1 trillion. Now we're multiple trillions. Probably the next crisis, whatever it is, will be tens of trillions and the very low tens of trillions, and then it just continues from there. So, again, this is true for all kinds of other countries. We don't have time to go into those now, but if we just go over here, so
So
again,
I think, Luke, they're either, like you say, they're gonna have to inflate the dollars to
yeah,
cover this,
correct.
or another scenario that's possible is that all of these programs are going to be completely means tested. And I can see a combination of this. And they're going to
Yeah,
say if you have assets, you're not going to get the same thing that someone that doesn't have assets.
yeah,
And I think this is you can talk to people in Greece about this and other
yeah,
where things have happened. this is, I think it's going to be a combination. So there's going to be some real unrest. I just, and that's why I love that you had those slides before when you have that corrupt monetary, what it does to the society,
Yeah.
the ever
Mhm.
the loop.
Yeah.
That was so well put. I just enjoyed that a lot.
Well,
It's
thank
spot
you.
on.
I appreciate the compliment. I mean, I guess I shouldn't be smiling when we're talking about this,
I know
but
it's
yeah,
just
I really believe that this, as a function of time, here and now, society feels really weird right now. It feels a lot weirder than 5 years ago, and 5 years ago it felt a lot weirder than it did 5 years
right.
before that. And I'm an optimist. People that call me a moon boy for talking about Bitcoin think I'm an optimist, but the reality is that I'm equally a pessimist. This system that is a violation of the law of conservation of energy and incentivizes people to act less morally and thinker in a shorter and shorter time
Right.
preference, like the only possible route forward is that it gets worse. And I think we're coming up on the point here where the system and the social layer of Bitcoin are so obviously superior to the alternate that in a matter of years we'll start to see that transition occur. And I think one way in which people will evaluate the morality and the soundness of that system is in supply. I think there are other data points people use too, but I think one of the main ones is supply. And so if we look at the supply here again, going back to our much earlier in the conversation, the supply of Bitcoin. If we're looking between 2009 and 2022 here, those are the total number of Bitcoins that have been created. And then if we overlay on the same timeline the US dollar from 1960 to 2022, we see that, obviously both have gone from zero supply to max supply, where it is today.
Mhm.
And if we go out roughly 20 years or so to 2045 or so, considering how much has been created in the last couple of years compared to the previous 107 years of
Mm.
the Federal Reserve System, if we just put that out, Bitcoin supply will increase, but the supply of the dollar increases a much greater amount. And as you saw there briefly, the relative supply of dollars in existence previously goes down as a ratio compared to the total supply. And so what you
Boy,
see is that, again, if one is an optimist and assume the dollar is going to survive a century after that, the percentage of them that exists today just continues to go down and down and down forever. And it has to, because if we borrow more dollars into existence, we have to create dollars in the future to pay off the interest of our current dollars. And so at
yeah.
the time of this recording, Jim, 90% now, I believe it's 92% actually, of all Bitcoins have been created, and way less than 1% of the dollars have been created. And so, I talk with people and they think that, $100,000 per Bitcoin is bullish, or 500,000 or 1 million. And the way I put it is that, what if Bitcoin is a future monetary stock of the earth? How do we price it? Well, the only logical way is in infinity. One of my threads was about a game of Monopoly. If we're thinking about a game of
Mhm.
Monopoly, the Monopoly dollars have value within that system, that again, that board of rules, that given paradigm of Monopoly with all the little plastic houses, everything, and it
Yes.
has value within that. But as soon as you start thinking outside of that set of rules, all of a sudden it doesn't have any value. What is the exchange rate between a dollar, like in our wallet? Um, you know, like if we go into our wallet here, I have a 20 on me. Like what's the exchange rate between a dollar, real money that I can actually spend versus Monopoly dollars? It's like there is no exchange rate because they're incompatible systems. They're
Right.
different,
Right.
they're different sets
Right.
of rules. And so the thing with Bitcoin, most people look at it and think it's an allocation of their portfolio and this and that the other, and perhaps for now it is, but I believe fundamentally they're inherently contradictory systems. We're comparing the Federal Reserve's ledger with the Monopoly board games rules, that instruction
Right.
cards ledger. And in competition to those two systems, we have this algorithm floating up there in cyberspace that we call
Mhm.
Bitcoin that has a brute force physical cost. And the best set of rules wins, the best game of chess wins. And in the same way that the exchange rate between the US dollar and the Monopoly game has no exchange rate because it's laughable, I believe in the same way, in an alarmingly short period of time, it will be the same way between Bitcoin and every fiat currency. But
So knowing this and trying to act on this as someone that's trying to preserve our capital, and I think you've taken a similar tack as I have. You value real estate. It's something you can put your hands on, which I have more faith in that. That's why I've always invested in that, because I can see it, I can feel it, I know what the return that something solid like that. And there was a great country western song that was popular in the fall, "Buy Dirt." Grandpa said, "Just buy dirt," and they always
yeah,
say, by shoreline. They're only making so many. There's only so much shoreline. So if we want to preserve our capital, this is what I'm going to call on your expertise then. What would you recommend for someone getting started out? What is the best way to put some of our assets, why it's still that it's tradable right now before it isn't, to get in on this? What would you, I want to put you out on a limb here,
no, no,
but Luke, what would you recommend for someone to say, well, this is where you would need to invest? Would you want to invest in an exchange that does it on the trading? Would you try to buy a piece of Bitcoin? And how would a person go about doing this? Some
yeah.
practical things to help me preserve my capital so I have something to leave for my offspring someday. Because eventually you'll be in
Yeah,
the same position that you hope to pass on not only your knowledge,
yeah.
but something maybe that you've created
Your
that will help
energy,
make
your
their life,
energy.
your energy, but to help make their
Yeah.
life better.
Yes, that's all,
I
real
know your
estate,
parents
Bitcoin,
would
it
say
all
the
comes to,
same.
Mhm.
Your parents would just say the same thing. They're hoping that they tried to make the world things better for you.
Yeah, yeah, thank you. But yeah, the reason I'm laughing is because Jim, I've talked to so many people, and I can genuinely, I'm really glad we're recording this because I can genuinely say I think you understand it so much faster than other people. Like the fact that you're
Oh,
saying like,
thank you.
before it's not tradable and this, that, and the other, like you get it. I think you get it to, a degree much better than the average person that's only given it a few hours of thought. So what I would say is that you're spot on about not becoming tradable. Either Bitcoin works or it doesn't. Either Nikola Tesla and Henry Ford and Milton Friedman, either that vision is correct or it isn't. In the same way that a plane either flies or it doesn't, or in the same way
Yes.
that a satellite orbits or doesn't, it's the same way with Bitcoin. Bitcoin is only going to be in one of two spots in a year, 10 years, 20 years, 50 years.
Yes.
It's either going to be the global monetary stock or it will have failed and died. Because we're talking again about engineering phenomena. And if we assume Bitcoin is that thing, it is a one, then it's consumed everything. If we assume it isn't and it's a zero, then it's done. It's binary. It's one or zero. There is no logical world that exists where Bitcoin has some percentage of everything else. Either it consumes
Or it
all
isn't.
monetary premium or it isn't.
Right.
And so
Right.
my practical encouragement to the average person listening to this is get off a 0% allocation as quickly as you can. And the reason for that is because if this is a one, if this is a closed system, if this is what I'm claiming it is,
Mm-hmm.
then the inherent risk in everything else is much higher than we perceive. A lot of people I know, Jim, such as yourself, that own real estate or bonds or this, that, the other, they believe these are low risk instruments. And to a certain degree, yeah, you can make that argument, but I would say that the risk is substantially higher than people realize. If we take real estate as an example, because we're both in that world, I like real estate because I could borrow crazy tons of money against real estate at stupid low interest rates. And the relative value of my mortgage, my fixed rate mortgage against that real estate goes down forever. But in the same way, Jim,
Exactly.
yeah,
People, yes, that's the beauty of it. You're paying that off in
yeah,
that in
but
2023 dollars.
exactly.
That's the beauty of it. That's
Yeah,
why it worked. That's why, but see, we're going by historical precedents, which I was
exactly.
raised with before, but I also was on here when we couldn't dream to have an
How's,
iPhone in our
mm-hmm,
pocket. That it was a big, yeah, it was a big deal when
yeah,
I finally had a bag phone. that I could go outside of a rental property and
Yeah,
make a phone call.
yeah,
So
yeah.
it all these things that you could never
Mhm,
conceive. You know, it's just like
mhm.
my dad who was passed when he was in the one room schoolhouse, and the teacher had him come out and they said a plane is going to fly over. These kids had never seen a plane before.
Wow.
So that's
It
how that it just it's kind of puts it into perspective. So
certainly
then,
does.
so how do I buy a Luke? How do I buy a piece of this Bitcoin? Are
Yeah,
they
yeah.
cutting it up? Is there people that are
Oh, yeah.
cutting these up and all this? What would
Sure,
be
sure.
a couple of good places where a person could invest? Why, like I said, it's still doable.
Yeah.
That you would recommend.
Yeah, yeah, exactly. So I think before that, I just want to say real quick that my point being that in the same way that a mortgage goes down against real estate forever because they're compared to real estate, there's only more mortgages. In the same way, even though there's only so much shoreline, there's only so many houses, the supply of Bitcoin is absolutely finite. And so in the same way, there's so much more real estate than Bitcoin. So I would say for your first question of a practical allocation, I would say for the average person, I would encourage them just to get off zero. Even if we're talking
Mm-hmm.
like $100, that's just 100, or even, again, I have a couple 20s here, just, 20, 40s, just take some amount of spending money that you'd spend on a lottery or a sports ticket or a couple of beers anyway,
Mm-hmm.
and just buy some Bitcoin. And the reason for that is because if this thing is what we think it is, that amount, however little you buy, inherently will eventually become worth more valuable than everything else you own.
And what was
As
the loop quickly
Mhm.
before I forget it? What did it start trading at back in 2009? How many pennies?
Yeah, oh, that's a great question. Oh, I have the perfect chart to show you from one of my favorite folks on Twitter. Let me just let's see how quickly I can do this. Oh, I'm good. Okay, here we go. I was fast. All right. So, can you see my screen?
Yes.
Okay. So what we're looking at here is the price of Bitcoin. Now, before I play, I just want to clarify what we're looking at here. On the left, we're looking in linear terms. So linear, again, 1, 2, 3, 4 for the average
Mm-hmm.
person listening. And on the right side, we're looking at logarithmic terms, 10, 100, 1,000, 10,000. And the reason it's important to look at both views is because human emotion likes to think in linear terms, but
Mm-hmm.
technology and math likes to operate in logarithmic terms. And what so many people do, Jim, is they look at Bitcoin going up and down in a volatile fashion, and they think, "Oh my goodness, it's a bubble! It's a bubble! It's a bubble! It's going up!" And then it crashes. Oh, it must be dead. And then, oh, it's a bubble! It's going up! It's going, and then it crashes. It must be dead. But in reality, if we look at a logarithmic scale here, if you look to the right, Jim, that orange line is
Yes.
Bitcoin's
Is there?
price.
There you go. There you go.
Yeah,
See that?
it's actually, again, if you stop thinking in terms of 1, 2, 3, and you start thinking in terms of 10, 100, 1,000,
And
Bitcoin
look at long
actually,
term trends. That is such a great.
yeah,
That is
yeah,
so good. I need you to send that to me.
yes,
I need that chart.
yes, his pseudonym is Wicked Smart because he's wicked smart.
Okay.
So you can look him up.
Yep.
But yeah,
Okay. I will.
just to play it real quick, the history is that it starts at zero. 6 cents is
Mm-hmm.
technically the first recorded
Mm-hmm.
price, but really, theoretically, it's zero. And then, of course, today it's roughly 20,000 or so. So what we have is in 2009, it's created the first bubble. In 2011, skyrockets $30, crashes 95%. A couple years later, skyrockets again, crashes 80% or so. And then going 2017, when I first heard about it, skyrockets, crashes again. The recent one in 21, 22. And then if we go out further, this white line is a hyperbolic tech adoption curve. And if we just assume that and assume Bitcoin survives, basically Bitcoin will reach every conceivably tradable price for the US dollar.
Mm-hmm.
So it starts from basically nothing, which is where it has to start if we're talking about commodities purely volatile
Mm-hmm.
on a free market basis. That eventually, then, in the same way that the dollar consumes all monopoly dollars, in the same way Bitcoin eventually consumes all political currency unit dollars, the US dollar, euro, and everything else of that sort. So I don't know where it's going in the short term. That's the second practical thing, not just to get off zero, but also to stop predicting where it's going next because we have no idea. But if we assume it survives and if we assume that it continues its adoption curve,
Mm-hmm.
then it should just continue to appreciate in price and relative value with everything else. So that's the how much. Just get off zero, even just $100.
Mm-hmm.
I'm not
Mm-hmm.
telling you go all in.
Right, right.
Only buy what you're comfortable with as you learn as a function of time. The second thing being, don't try to predict its exchange rate with the US dollar, because if it
Hmm.
has an exchange rate with the US dollar, it's cheap. And then the third thing would be that for the average person, Jim, starting out like yourself, when we're still in this era of exchanges, I would say just buy an exchange with really low fees and buy some Bitcoin, and then learn as soon as you can after that, ideally immediately, but I know people need time to learn. Then figure out how to have your own storage, your own cold wallet, hot wallet, everything like that. In the same way that you go to a bank and you have IOUs of a piece of
Hmm.
paper saying I own the gold. Yeah, you own that, but you don't own the gold. In the same way, if you go to an exchange online that they have the Bitcoins on their balance sheet, and the United States government regulates a lot of those exchanges, although not all of them, they have them on their balance sheet, and you're trusting the humans in charge of said exchange if they have those Bitcoins, and then you just withdraw them when you can. However, again, it should be said that these are exchanges run by humans, and I believe that eventually, if it's a fractional reserve system, which they probably all, or at least most of them are,
Hmm.
you should not use an exchange as a long-term storage mechanism. You should use it as a buying and a learning curve tool. And just to hammer that home, I want to give one last chart here before we go, of the total number of Bitcoins on exchanges. So if we see here the number of the white line, the number of Bitcoins
Hmm.
on exchanges went up and up and up and up, and then beautifully it peaked right in March of 2020 of the pandemic. If we go right over here at the end of Epoch
Hmm.
3, again, Epoch 3 being the third halving for
Hmm.
Bitcoin, total supply liquid peaks, and now over the last 3 years now, Jim, it's been doing nothing but going down and down and down, and we're in the fourth epoch, the fourth halving here of its block reward. And so anyway, if you extrapolate this out mere years, we have a really big problem where pretty much all of them have been bought. They've been bought by psychopaths like me that are buying them and like never going to sell for any amount of US dollars. And anyway, this is number one, an emphasis that don't hold your coins on exchanges, and number two is an emphasis that there's a lot less time, I believe, than people perceive. People think there's 21 million Bitcoins, but in reality, there's only about 2 million or so left on exchanges
Right.
today, because they're
So then,
deeply.
Luke, where do you, if with the exchange, the idea of the exchange being so kind of tenuous, where
Yeah,
then can you, you're not hiding it in your backyard, you're not putting it in a jar and burying it,
yeah,
right?
yeah,
So
yeah,
where can you hold this
yeah,
that that it's safe? I mean, how do you? This is so new to me.
yeah, yeah,
This currency, where do you hold that? Is there some server that's holding it?
yeah.
Where is it held?
Um, yeah, I don't like to say personally how I do mine, just
No, I
because,
know. Just give a
yeah,
little bit more
online, I don't
background.
want that. Yeah,
No,
I'm,
exactly,
yeah,
exactly.
but what and I can help you with that after the call, too. But basically, and
Okay.
there's a lot of free resources online for people listening. But basically, what I would say is, just keep it simple. Find an exchange with low fees. You can look those up. Gemini's one, Kraken's one. There's a whole bunch of other exchanges out there, Cash App and Venmo and Strike, a whole bunch of apps and services
Mm-hmm.
have it. So just look up a list, make
Mm-hmm.
sure that you find one that you can withdraw from. So Robinhood is an example, is when you can't withdraw from, and they make
Right.
that clear. So just find one you can withdraw from with low fees, ideally, purchase, and then set up a hot wallet and or a cold wallet, ideally, and
Mm-hmm.
then use that. So there's all kinds of different brands and services. I don't want to be accused of
No, I
advertising one, and
no,
all,
no.
and frankly, even more, I don't want to say which one I own. Just
Right. No, I
yeah.
understand.
But yeah, that's the basic story. You
Okay.
go to the online cyber bank, in the same way with physical branches. Just go to an exchange and
Mm-hmm.
purchase there. You exchange fiat dollars for Bitcoin currency units, and then from there you'll be able to advance from there. But for the average person, that's the easiest way to get started. I know there's a lot of Bitcoiners that would disagree with what I just said, but let's be real here. For the average person, that's the easiest way to get started, get off zero, and then you can continue to learn from there. And once you do this yourself, it feels so easy. You wonder uh, why it ever seemed complicated. It was the same way to me. I thought it was so complicated, but then I did it. And I was like, oh wow, this is
Well, Luke, that's what I
yeah,
appreciate about you. You have a great way of simplifying this and taking a lot of the mystery and things out of it. But
thanks.
learning the history and what we can apply from history helps us. We should learn from this.
Yeah,
And that's why I appreciate your worldview. And
appreciate it.
I really look forward to being connected and viewing more of your podcasts as this moves forward.
Thank you. Appreciate it. Yeah, I have a lot more shows out there. People can find me on Twitter, Luke Broyles, Broyles. You know, you can find me
I've been
there. And
spreading the news already.
thank you.
And
Thank
it,
you.